You are right. The stock market just fell $460.19 last night, which is Friday night while we are sleeping. So I like to say that you guys actually predicted this movement. Now, what do I say? Does this chart look familiar to you guys? Well, if it does, it means you have probably came to the mastermind group that we actually conducted just several days back. I think if I'm not wrong, it was just Thursday night. So Thursday night, we went through this chart, did we not? We went through the chart and you guys were the one that selected this resistance line. Alright, this is the resistance line that was signaling that the Dow Jones will fall back, but we just do not know how much they will fall back. And you guys actually predicted this movement, and it actually did happen. So interestingly, you guys also predicted that not only this, you guys actually voted on it also. Let me show you guys. Okay, so if you actually came to the mastermind group, we realized that we actually went through this poll, right? Majority of you guys were at the sell to hold. This is sell, this is buy. Okay, this is sell, this is buy. So majority of you guys voted that the Dow Jones Index is either a sell or a hold. Alright, no, just a small handful of you guys actually voted that it's a buy, and in fact it did actually went down. We also look at SPX, S&P 500. Similarly, we have the same thing. It actually fell down. Right now I don't know why this is not reflecting properly. Let me see the SPY if I can see properly. No, I can't see it. Okay, so it doesn't matter. So anyway, you guys actually predicted that the S&P 500 will fall back too. Let me show you that. Right, you guys were actually more inclined to the hold and sell, whereas the buy and the buy was not so much. And in fact, it did happen. It actually went down. Similarly, for the Nasdaq, it was more of a hold. Actually, this Nasdaq was more of a buy. Let's look at triple Qs. Triple Qs also went down, but somehow you guys were actually more towards the buy. If I'm not wrong, this time around it's more towards the buy. But in fact, you look at Dow Jones was really accurate, where all of you guys predicted it will come back down, and it actually come back down. So let's move on to what actually happened. How did this happen, and what are my take on it? My analysis on how did this happen. Okay, so first and foremost, let's go back to Fed rate hikes. Remember in the mastermind group we have been talking about Fed rate hikes. I shared with you guys very briefly about Fed rate hikes. So what happened was that last year 2018, right, the US Fed board actually raised interest rate by 0.25 percentage point all the way till, if I'm not wrong, 2%, right, to 2.25% for 2018 itself. And he actually projected that they will actually have 3 more rate hikes in 2019. Now when the Fed rises the interest rate, this means that they are actually bullish on the market. Why? Because rising the rates on this on the market means that the banks will actually take in will give you a highest interest rate when you actually borrow from them, and then with that, funds will actually move in more because banks are earning money, the financial sectors are doing well, business are doing well. That's why they're borrowing more money to actually expand on their business. So this is the reason why they actually want to increase their rate over the past few years, because they were actually bullish on the market. However, what happened was that in 2019, they actually paused all the rate hikes. But before I go to that, I would like to point out this earning call that FedEx actually showed a completely different picture. Now, FedEx is a transportation company, one of the biggest, in fact, if not wrong, the biggest transportation company around the world. It actually transports goods, products and services all over the world, and hence making a very important indicator whether the economy is doing well. Now in FedEx earnings call, right, this time around FedEx in quarter 3, they missed by EPS and they missed their revenue by a substantial bit. Alright, so what happened was that in the earnings call, they actually highlighted this is what the CEO said: slowing international macroeconomic conditions and weaker global trade growth trends continue, as seen in the year-over-year decline of FedEx Express international revenue. So this is what they actually said. This is the executive vice president and the CFO said. Okay, so they are actually quite negative on the outlook, and because of that, FedEx is unable to forecast fiscal year 2019 end year mark to market their final adjusted account, the EPS, they are unable to actually give a very very like good estimate on the forecast, right? So this is what they are currently trying to forecast lah, but it's not a very very good gauge on it. So now jumping back to the interest rate, right? So what happened is that 2019, the start of it, this is actually, continue. So this is actually, when was this taken? 31st January 2019, all right? Fed Chairman Jerome Powell actually put rate hikes on hold as global economy slows. Again, we see global economy slows. Now, with that said, in February, they did not have a meeting because usually every single month the Federal Reserve will actually have a meeting to discuss whether they should increase the rate hikes or not. So this time around, we see that just the first month within the 2019, they're supposedly going to raise the interest rate by 3 times, and this time around, the first month, January, they already say that they're putting it on hold as global economy slows down. Okay. Now next, when we look at Bloomberg's article, Powell's, this is the Fed chairman, signals prolonged Fed pause as inflation lags and risk loom. So this means that again, after 2 months since the meeting, they actually announced that they will not be increasing rate hikes for the year because they see further slowdown in growth. And as we mentioned in our mastermind class back then, was that US also suffered a huge trade deficit. Their deficit actually increased by a few 200 billion, if I'm not wrong. Okay, trade deficit against the other countries increased by 200 billion. This is a lot of money. This is so much bigger. This is like so much bigger than DBS itself. You can actually, that's how big. It's really so huge that it's causing economic slowdown in US. And also we also discussed that China is facing a global slowdown. Their GDP only increased by 6% last year, which is the slowest among 28 years. Right? So this is huge news, and that's why the market is starting to panic. So with this rate pause, right? So what happened was that interest rate, the yield curve actually went down. So if I'm not wrong, the yield curve, 10 years yield curve should be TBT, right? 10-year yield curve, back then, see down here when this is 2017, right? So 2017, 2018. So the Fed has been trying to increase rates. You see rates increasing, and then trying to go all the way up. And at this point, we also see the market keep coming down because when the Fed increase rates too fast, it will cause a lot of problem also because, like I said, higher rate of lending, right? So higher rate of lending also will affect business costs. So that's why they were actually panicking because it was increasing too fast. And then when it suddenly stops too much, people will think that the economy is coming down, and that's why Bloomberg articles actually show that prolonged Fed pause risk loom. All right, so all these are things that there, and then there's also the Brexit uncertainty, and that's why this kind of stuff happen. Now we also have this article. This article was actually highlighted to me by one of the members of this group, that stock Dow Jones bleeds heavy losses last night because recession fears bite again. Why? Because of economy slowdown. Now what happened was that Dow Jones index actually fell 1.77%, S&P 500 fell 1.9%, while Nasdaq actually slumped 2.5%. So the spread between the 3 months and 10 years Treasury yield turned negative for the first time. As you see here, this is 10 years yield curve actually went all the way down. This is a gap down, all right, and you can see the high volume bar. So this is huge momentum, all right. So coming back to the article, yield curve serve as a screener for the economy. In good economy times, the yield curve on the long-term bonds run higher than short-term bonds as investors expect a booming economy to translate to a high interest rate for over a long term. Now, with a lower interest rate on the long term, this means that the investors are more negative towards the overall market. Alright, so also what happened was that last night, because of this stuff, because they paused in the rate hike, right? So financials, because they make their money through lending money, and lower rate interest rate means they actually make lesser revenue, right? So Wells Fargo, JP Morgan, Bank of America actually ended the day deep in the red. Now furthermore, we also have corporate earnings like Nike tumbled 6%, which is a significant portion of the Dow Jones index, tumbled 6%. Tiffany & Co ended up 3.2% ended up, means it actually went upwards 3.2% after the modest guidance that actually clawed back from a negative 2.8% at the start. Alright, so there's also material stocks that add fuel that sell off pressure thanks to copper futures on fear of economic slowdown. So everything is just coming down. Right, so down here we also see more of this stuff, all saying that it's coming down, gainers and losers. Alright, so last night you can see almost every other index actually went down. Right, so is that something we should be afraid of? Is that something we should fear? Now this is from what I see down here in this chart, Dow Jones Index. Let's look at Dow Jones Index again. From what I see here, our next potential support line should be around this line here, which just nice coincide. Can you see this line? Let me just quickly edit study. Let's draw it out. Let me just quickly do it. So sorry, let me just change the color so you guys can see better. So let's change it to green color here. Okay, so our next support line is kind of around here, because down here it actually resisted once, twice, consolidate here, consolidate here again, consolidate these two part again, and then resisted here, and then after it broke out here. Okay, so it actually rebound here, and somehow it also coincides with this 50 days moving average. Alright, so this will serve as a rather strong support line. Now if it actually cross down and break past this support line, huge red volume candlestick, then this suggests that it will potentially break even lower. Our next support line will be at this 200 days moving average, and it still fails. Our next potential support line will be at this point $238,000 already. Alright, so this is the quick analysis on why the market tumbled, mainly because of economic slowdown, as we have seen from what the articles have shown. The transportations are lagging, trade uncertainty, economic slowdown, recession looms. So all of these things actually attributed to this. And I just like to say that we didn't even know about this last night. We didn't even know most of us didn't even know about this when we actually attended mastermind class. But all we did know is that we just looking at this chart back then. This chart was very, very clean. We didn't even have this. So looking at this chart, we can straight away tell that you guys actually voted that it was a sell. Right, you guys actually voted that it was a sell, and I was very, very happy, because when I opened the market, when I checked back with this survey that you guys did, it actually shows that you guys actually understand about support and resistance line very, very perfectly well. Alright, so once again, this is Young. Hope you guys learned something, and I really hope that for those of you guys that did not join us for our previous mastermind class, can join us this time around. I'm not too sure when we're hosting it yet, but I'm still trying to fix a date, so do stay tuned, and till then, subscribe and like this channel. Alright, so till then, I'm Young. Bye bye.